If you're looking to buy a home, you're probably wondering what all this banking crisis and everything that's going on, how it's going to affect you. The reality is, in the very short term, you're going to see interest rates start to fall. They've fallen actually quite dramatically just in the first 3 days of this week. What happens next is the real key question. The reality is, even though rates will fall, which will seemingly feel good for many buyers, don't get me wrong, that's a great thing for rates to come down. Tough thing that will become is the fact that these banks, where all the lending will now be centralized, so your 5 or 6 biggest banks, after many regional ones go out of business, they will not have as much money to loan out. There will be almost what they call next, it'll be a credit crisis. They won't be able to give out as many loans. You're going to see a very tightening aspect to mortgages if this ends up happening. If regional banks start going out of business and you have 5 or 6 big banks that are only ones lending money, it's going to become a credit crisis in place of a banking crisis. You can't change what's happening around you, but you can just try to focus on the numbers that actually matter when it comes to buying a home, which is your total out-of-pocket, your down payment, and your closing costs, your total monthly payment, and if that location and that home fits you for the next, ideally, 7 to 10 years, but bare minimum, 5 to 7.